What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Now, today's video does have to be a little bit faster than usual. I actually have somewhere to be in an hour, but I want to get this video out for you guys because I wanted to show you how the power of these levels actually plays out. So we were talking right here, right? And if you go all the way back to this level that we had way back here in January of 2018, you could see that we did in fact have that weekly close right there. And that level was around 16,100 to about 16,300, depending on which exchange you're looking at, right? Now, if you come all the way over here and you look at where we actually had this bounce, yes, we kind of overshot it a little bit, right? Because this does tend to happen in these types of moves where you have these crazy wicks to the downside, but you could see right there, only from our target, it was down about 3%, right? So if you were using low leverage, you would not have gotten liquidated and you should have been able to get into that trade. Now, a lot of people say, well, do I put my money where my mouth is? Guys, I took 2 trades over the course of this. The first one being down here, I closed that out for a scalp, and the second one was this morning right before the CPI data, and I can show you right here. These are the 2 trades I took. You can see this one opened at 16.25, closed at 16.3. That was for 0.035 Bitcoin, and this one right here was opened at 17 roughly and closed at 17.11 for 0.27. So that's about 0.6 Bitcoin that I was able to scalp. Now, some people say, well, why don't you just keep the trade open? Well, because you can make more money when the price fluctuates up and down all over. Plus, you don't want to be a hero, right? So if you guys are interested in learning how to trade, this information is absolutely free. As you guys can see, I do put my money where my mouth is. And yeah, it's not a huge gain to make 0.6 Bitcoin, but guys, that's 0.6 Bitcoin I didn't have yesterday. So if you just take it easy, you don't over leverage, you play these levels and, you kind of get in and you get out. You don't want to sit in these trades and get, swallowed up in that volatility. So if you guys do want to learn how to trade, I do go over this every single day. Watch the tutorial popping up above. There's like $46,000 in bonuses right now below if you guys are interested. But let's dive in and let's have a look, because what was happening was we had this CPI data came out, right? You could see that the freaking S&P mini futures went absolutely nuts this morning. I tweeted this over, by the way, on the on my Twitter, if you guys are following me, and you can see right here, we are opening green. So I do want to talk about why we're seeing this. And also Sam Bankman-Fried, by the way, he did come out and issue an apology. And now Gary Gensler is also getting involved. So we're going to talk about that. But you can see right here, the consumer price index, a broad-based measure of goods and service costs, rose just 0.4% for the month and 7.7% from a year ago. That was its lowest annual increase since January. Economists were expecting increases of about 0.6% and 7.9%. So granted, inflation is still actually rising. Nevertheless, it's not rising as bad as they thought it was, right? So I guess that's why people are getting excited about the price today. So you could see again how these levels play out. Look at this right here. So obviously we went a little bit lower than our target, right? You're never going to get it exact, right? People that are thinking they're going to time exact bottoms and exact tops, just get that out of your head. You're not going to do that, especially if you're trading. It's all about just finding a good entry and a good exit. And you can see right here, we are back in this blue zone again. So this is really, really important that we are in this level, because you can see back here, this is where we had a little bit of support, right? We came up here, we retested it in December of 2020, and that's where we had that bounce. So this is a very significant zone. And what's crazy is you can even see when we came down here on this Terra Luna crash, look at that. That was exactly at the bottom of that level too. And zooming in right now, look, we are back inside the zone, right? So are we out of the waters just yet? No, not exactly, guys. As you can see right here, what is happening currently? We're being held down. These 2 candles right here are providing a bit of a zone, and you can see that is acting as resistance. So what do we need to do if we were to look to take another trade? What I would wait for was to get above pretty much $18,000 on the nose is really where you want to get above and, have a little retest. To be totally honest with you, though, the level is more, in my opinion, around 18,200, but around that, anywhere around that area would be fine. So what you'd want to see is, maybe come up here, have this retest, and then confirmation to the upside, right? And then obviously after that, we'd have to get above this very, very, very significant level of around 19,300. But ultimately, just in a nutshell, guys, if Bitcoin can close above $18,300, especially by the end of this month, which I don't see why that's not possible, then I would consider this to just be, yes, it's another lower low, and technically, we do have a new low that we put in, but, we still could see that continuation to the upside, the way that I was talking about with the the previous market, right? How we had a very similar pattern happen 2 bear markets ago, right? And it could be something that we're seeing play out right now. Now, at the same time, we actually finally have the DXY falling out of this pattern. And remember, I said, if we start to fall below 109, we could head all the way back down to 105. And currently we're sitting at 108.5 right now. So I'm not saying this is the end of the dollar's run. You know, people have been saying this for months and months and months. I'm not going to pretend like I know, but this could finally be the breakdown that we're looking for, because you could see in, this, for example, this previous structure right here, we did not break that, right? Right here, we have broken it, right? We had this touch, we had this touch, we had this touch, and we are now falling through it. So could this be the final top for the dollar? If so, then this still holds true that we could still continue to see a rally into the end of the year, like I said, and maybe $25,000 is still on the cards. Now, of course, we still have the black swan of the FTX debacle, and we don't know 100% how this is affecting all these people involved, right? But you can see that Sam Bankman-Fried reportedly, here's like another thing, transferred about $4 billion of FTX funds secured by tokens such as FTT and shares in trading platform Robinhood to Alameda. According to the report, a portion of the transferred funds entailed customers' deposits, a transaction where Bankman-Fried allegedly failed to inform other FTX executives. Sources close to the matter indicated that Bankman-Fried's failed communication with executives, he didn't basically talk to them because of the fears that it would leak to the public. So yeah, of course you should be afraid that it should leak to the public, because what you're doing is wrong, right? Well, he came out, and this is what he said. If you guys didn't want to read it, I highlighted some of the keys. He says, "I'm sorry. That's the biggest thing. I effed up. I should have done better. I also should have been communicating more very recently. This is all about FTX International, the non-US exchange." So he says FTX US users are fine. So luckily, if any of you are actually using FTX US, according to Sam, you should be fine, right? The full story here is one I'm still fleshing out every detail of, but as a very high level, I effed up twice. The first time, a poor internal labeling of bank-related accounts meant that I was substantially off on my sense of users' margin. I thought it was way lower. The actual leverage was 1.7x, whereas the liquidity was 0.8. Because of that, when it rains, it pours. We saw roughly $5 billion of withdrawals on Sunday, which was the largest by a huge margin. Right now, my number one priority by far is doing right by the users, and I'm going to do everything I can to do that, to take responsibility and do what I can. So right now, we're spending the week doing everything we can to raise liquidity. I can't make any promises about that, but I'm going to try and give anything I have to if it will make it work. There are a number of players who we are in talks with, LOIs, term sheets, etc. Every penny of that and of the existing collateral will go straight to the users unless or until we've done right by them. So what does this mean going forward? I'm not sure. That depends on what happens over the next week. But first of all, one way or another, Alameda Research is winding down trading. They aren't doing any of the weird things that I see on Twitter, and nothing large at all. And one way or another, soon they won't be trading on FTX anymore. So this is basically his official apology. It sounds to me like they're very concerned with getting users their funds. Hopefully this works out, and doesn't get strung along like the Celsius situation, which is still happening. Those users still do not have their funds. But Gary Gensler, and I was going to play these clips, but like I said, guys, I got to get going. I have to make this video quick. So some of the highlights, he says, this is not like the New York Stock Exchange. These platforms commingle. It's a toxic combination where they take people's money, they borrow against it, not much disclosure, and then they trade against their customers. He says, but building the evidence takes time. They also asked him about if he felt hoodwinked, because he had actually met with Sam Bankman-Fried, and he said, he was shocked. I think that investors need better protection in this space. It's a field that's significantly non-compliant, but it's got regulation. Investors around the globe are getting hurt. The public can fall prey to celebrity promotions. And, ultimately, if you watch the rest of this interview, he, talks about that, they're very interested in investigating this. And it's really weird. Once again, they didn't come out and say, we need to ban this, we need to shut these things down. He literally says, I urge you, if you're interested and you want to be regulated, come to us. We will work with you. We will help you to get things worked out. Now, I'm not saying that we need centralization by any means. I'm all for DeFi, but ultimately, you could see that they're not trying to say, screw these guys or no trading on exchanges. No, they're like, we're okay with it, but you need to come to us, be compliant. So I don't really know how this is going to end. Like I said, it is a bit of a step back, unfortunately, in the crypto space. It has sort of put a bad taste in a lot of people's mouth. I will say that I do believe that we will get out of this ultimately, and I think Bitcoin will come out even stronger on the other end. But right now, we need this flush out. Even if there is another liquidity issue, I don't know what's going to go on with these other, VCs and companies coming out. I don't know how much money is invested in what, but ultimately I can tell you that once this cleansing is done, it will honestly be one of the best things for Bitcoin, and it sucks living through it. But I mean, this is historic. This is literally something that is going to go down in the history books. Like, teachers are going to be teaching this in school of what you don't want to do, or as an example of something you shouldn't do, right? So that's basically that. And like I said, guys, having a look right here, the good news is that we are back above this downward sloping trend. And, really, like I said, the area you want to kind of get above is above that sort of 18,100 to 18,300 level. That would put us right back in this purple bands, right in this trading range. And then, we can continue from there. So thanks again for coming back to the channel. Hope you guys enjoyed the update. And again, like I said, I don't really enjoy posting my trades a lot because it seems like I'm bragging, but that's not what I'm trying to do. It's just, I'm trying to show you guys that if you are patient and you wait for these levels and you play them safely and you don't over leverage, and you don't try to be the hero and do this like $1 million long that you hold open for like 6 months or something, you can literally make a lot of money scalping these, markets, especially in these volatile times. So if you guys are interested once again in learning how to trade, I highly suggest that you take advantage of my absolutely free tutorial, which is popping up right here, right now. Until next time, stay crypto. And of course, peace out.